Hello students, welcome back to my YouTube channel RAW Raghavendra Institute of Educational Excellence. Students, in the previous video we have discussed about what is change in profit sharing ratio, why does a change takes place among the existing partners with respect to the profit share, and how to derive the gaining ratio, the sacrificing ratio, and the new profit sharing ratio among the existing partners. Now, today in this video, we are going to discuss about the accounting treatment of goodwill, right? So, in this concept, that is in this video, it is purely we are going to discuss only about the goodwill and how to deal with goodwill. In the previous chapter, we have learned what is goodwill is all about, right? So basically, we'll give an introduction to that particular aspect. So goodwill, when I say the term goodwill, it is nothing but in general term, it is your reputation. So what is goodwill? It is nothing but your reputation in the business. So reputation of your business. And the term goodwill is considered to be as an intangible asset. Goodwill is basically an intangible asset. It will be shown on the asset side of the balance sheet, but it is not a fictitious asset. Remember, goodwill is nothing but in general term a reputation, that is good name. Reputation is nothing but good name what the business have earned so far, and it is an intangible asset, but it is not a fictitious asset. Please keep this in your mind. It is not a fictitious. It is not a fictitious asset. I hope I'm making sense to you, right? So it is basically an intangible asset, but it is not a fictitious asset. And this goodwill is basically dealt under the accounting standard AS 26. So accounting standard AS 26 deals with goodwill, right? So accounting standard AS 26 it deals with goodwill, and it is giving some basic guidelines. According to AS 26, it says that goodwill is of two types basically. Okay, so in general goodwill are of two types, but according to AS 26, only purchased goodwill should be recorded. Okay, according to AS 26, only purchased goodwill should be recorded in the books of accounts. Am I making sense to you? Only purchased goodwill should be recorded in the books of accounts. Then what about the second type of goodwill, that is self-generated goodwill? Okay, so the second goodwill, that is self-generated goodwill. Okay, so self-generated goodwill should not be recorded. Able to understand? Should not be recorded in the books of accounts. This is the guideline given by AS 26. So what it's trying to say, basically goodwill are of two types. Okay, so basically if you see, goodwill are of two types. Okay, when I talk about goodwill, goodwill is basically categorized into two types. Okay, the two types of goodwill are: one, your purchased goodwill. One is your purchased goodwill, and the another one is your self generated goodwill. Now you may ask, what is self generated goodwill? Before I deal in detail about the self generated goodwill, the previous topic, that is nature and valuation of goodwill. In that particular topic, the first illustration problem where a particular firm would have purchased another firm running business where you had some differences appearing on the debit side that you declared as goodwill. That is what we call it as a purchased goodwill concept. The rest of the methods to calculate goodwill, you use simple average method, weighted average method, then super profit method, capitalization method. All these methods are used to calculate the firm's goodwill. That is nothing but self-generated goodwill. Okay. Basically, self-generated goodwill is used to derive the goodwill of the firm, and that goodwill will be used to find out what amount that should be paid as a premium for goodwill by the gaining partner towards the sacrificing partner. So we are going to deal in detail with respect to premium for goodwill quite shortly. So now, before going to the premium for goodwill, I would like to make you to understand this two concept. The goodwill are of two types. One is purchased goodwill, right? This is one purchased goodwill, and this is two self-generated goodwill. So purchased goodwill is to be recorded. Okay, so that is what they say. Record in books of accounts. Okay, record in books of accounts. Whereas self-generated, not to be recorded. Okay, so don't record. You please try to understand the concept. Okay, so self-generated, don't record in the books of accounts. Any doubt so far? If you have anything, please share it in the comment section. Right? So the two types of goodwill are purchase goodwill and self-generated goodwill. Purchase goodwill should be recorded in the books of accounts as per the guidelines of AS 26, and the same guidelines were given by AS 26 is the self-generated goodwill is not to be recorded in the books of accounts. So basically, when a partner or when change in the profit share takes place among the existing partner, obviously one of you partner might gain and one of you partners might have to sacrifice. So that's the reason we find the gaining ratio and the sacrificing ratio. And when a partner gains and another partner sacrifices, the partner who gain should have to compensate the sacrificing partner by paying an amount towards goodwill, which we call it as premium for goodwill, right? So now let us first try to understand how to locate whether the given goodwill is a purchased goodwill or whether the goodwill is a self-generated goodwill. So for the clue or the identification is purchased goodwill. If it is a purchased goodwill, this will appear on the asset side of your balance sheet. Able to understand? On the asset side of balance sheet. Or if not, you may also find a statement. If balance sheet is not given, okay, then if you find a clue word in the sense goodwill appearing in the books at some value. So if you are coming across the word goodwill appearing in the books, okay, then that is an indicator that it is a purchased goodwill, right? So goodwill appearing in the books. If you find this word, then it is an indicator that it is a purchased goodwill, right? So purchase goodwill can be located by two way. One, in the balance sheet, if you find goodwill appearing on the asset side, then it is a purchase goodwill. Or second, if you find words, the clue word goodwill appearing in the books at, then it is a purchased goodwill. Now, let us try to understand how to locate the self-generated goodwill, right? So, self-generated goodwill. For this, the clue word is goodwill of the firm is valued at. It will be mentioned as goodwill of the firm is valued at. Okay, goodwill of the firm is valued at some value. So if you find the word, okay, goodwill of the firm is valued at, then it is an indicator that the goodwill is a self-generated goodwill. Now let us understand the accounting treatment for these two types of goodwill, right? So let us now learn the accounting treatment for goodwill. If it is a self-generated goodwill or if it is a purchase goodwill, what is the accounting treatment? First, let's go for purchase goodwill, right? So accounting treatment of purchased goodwill. If this is the case, then the purchase goodwill should be written off. Okay, it should be written off among all the partners in their old profit sharing ratio. Okay, in their old profit sharing ratio, PSR, right? So if you find any amount of goodwill appearing in the balance sheet, then you need to write off the goodwill among all the partners in their old profit sharing ratio. Now let us learn the journal for writing up of the purchased goodwill. So journal entry is as follows. Now the entry will be as all partners capital account will be debited if suppose they are following fluctuating capital method, or else if they are following fixed capital, it will be as all partners current account. So that's how, if you see in textbooks, you can find the entries as all partners capital or current account. So if they are using the fluctuating method, you will have capital account. If they are using the fixed method, it will be as current account. So all partners capital account debited to goodwill account. Okay, to goodwill account. This is the entry to be followed. Okay, if fluctuating capital is maintained. Okay, if fluctuating capital is maintained. Able to understand? Now, suppose if you are following the other way, that is, you are following the fixed capital. In that case, the entry will be as all partners current account, right? All partners current account will be debited to goodwill account. Okay, so this is the journal which we need to follow. Okay, so this is in case of fixed capital. Okay, this is with respect to fixed capital method. Okay, now remember one thing, if the question is silent, like what method to be followed is not given in the question, then we need to follow fluctuating capital only. So when the question remains silent, always go with fluctuating capital method. Okay, if the question has emphasized you what method of capital is maintained in the firm, then you have to pass the entry accordingly. So in both the case, the goodwill will be written off in their old PSR. Able to understand? So in this case also old PSR, in this case also it is in the old profit sharing ratio. So first the treatment is, if it is a purchased goodwill, then the entry should be passed in such a way all partners capital account debited to goodwill account. Whereas if it is a fixed capital method, the entry to be followed is all partners current account is debited to goodwill account. Any doubt so far? Right. So we have just discussed what is goodwill. Goodwill is basically an intangible asset, and it is not a fictitious asset, and it is nothing but a reputation or the good name of the business. And accounting standard AS 26 is talking about the goodwill, and only the purchase goodwill should be recorded in the books of accounts, whereas a self-generated goodwill should not be recorded in the books of accounts. Right? Just kindly take down the notes. Right? I'll give you time to kindly take down the notes. Any doubts? No. Yeah, please carry on. And the journal entry, what we have discussed also is mentioned below. Right? If it's a purchase goodwill, where it will be appearing? It will be appearing on the asset side of the balance sheet. If not, you will also find that goodwill appearing in the books at. If these words are found, then it is an indicator of purchase goodwill. Whereas self-generated goodwill will be mentioned in such a way that goodwill of the firm is valued at. And accounting treatment with respect to the purchased goodwill, it will be written off among all the partners in the old profit sharing ratio. And the journal entry is also given here. All partners capital account debited to goodwill account if you follow fluctuating capital method. If you are following the fixed capital method, it will be as all partners current account debited to goodwill account. Remember, if the question is silent, go with your fluctuating capital itself. Right? Now, let us understand the second one. What is the second one? The second concept is self generated goodwill. Okay, so self generated goodwill. So the purpose of this goodwill is mainly to derive the amount of compensation, that is premium for goodwill. So self-generated goodwill is basically used to derive the amount that has to be paid as a compensation to the sacrificing partners by the gaining partner. Right? So self-generated goodwill is used to derive the amount of goodwill, that is premium for goodwill. Right? So take it along with me. Self-generated goodwill, okay, used to derive the amount of premium for goodwill payable to the sacrificing partner by the gaining partner. Okay, by the gaining partner. Now here this has some step by step procedure. Okay, So when you find a self-generated goodwill existing in the question, then please follow these steps. So step 1, you find out gain or sacrifice among the partners. Next, step 2, you compute, that is compute the amount of premium for goodwill payable. Okay, you find out, that is compute the amount of premium for goodwill payable, okay, to the sacrificing partner by the gaining partner. Okay, so find out the amount of premium for goodwill, okay, that is to be paid to the sacrificing partner by the gaining partner, right? By whom? By the gaining partner. It is quite easy if you understand the concept, right? Okay, then the third step, okay, so step 3. So once you derive the amount what you have to transfer, okay, you pass the journal entry. So how you are going to derive this? That is computing the amount of premium for goodwill to the sacrificing partner by the gaining partner. Okay, so for this you have to follow in this way. Firm's goodwill, okay, the calculation should be done in such a way. The firm's goodwill should be multiplied in the gaining ratio, okay, in the gaining ratio of the gaining partner, or you have to derive on the sacrificing ratio of the sacrificing partner. So this amount, once you derived it, you have to distribute it. Okay, so the third step is pass the journal entry. Okay, so you have the three level step, pass the journal entry. So what is a journal entry if you ask? Gaining partners capital account debited. Okay, gaining partners capital account is debit to sacrificing partners capital account, to sacrificing partners capital account. This you will be followed when you are maintaining what capital? Exactly, when you are maintaining your fluctuating capital. Okay, when you are maintaining fluctuating capital method. Suppose if you are following the other way, fixed capital, then what will be the entry? The entry will be as gaining partners capital, sorry, not capital, current account. Okay, we are going to see on fixed method, right? So gaining partners current account will be debited to sacrificing partners current account, to sacrificing partners current account. Okay, so this you will follow if you are maintaining the fixed capital method. Able to understand? If you are following fixed capital method, this will be your journal entry. So right now we are completed the concept what is to be required, that is for working a problems on goodwill. So I just repeat it or sum up. Goodwill is basically an intangible asset. It is a reputation or the good name of the business. It is an intangible asset, but it is not a fictitious asset. Accounting and AS 26 talks about goodwill. According to that, Basically the two types of goodwill, purchase goodwill and self-generated goodwill, are two different types of goodwill. But only purchase goodwill should be recorded in the books of account. Self-generated are not supposed to be recorded in the books of account. So how to understand whether the given goodwill is purchase goodwill or self-generated? The words appearing in the books that means it is a purchase goodwill, or if the word mentioned as okay goodwill appearing on the balance sheet, then it is a purchase goodwill. And self-generated goodwill will have the word valued at. So according to this, the accounting treatment will be in such a way: purchased goodwill has to be written off among all the partners in the old profit sharing ratio. So, journal entry, if you're following fixed capital method, you have to follow one journal. If you're following the fluctuating capital, then you need to follow the other journal. So, if it is a fluctuating capital, then all partners capital account debited to capital goodwill account. If it is a fixed, then it is all partners current account debited to goodwill account. Remember, self-generated goodwill is basically used to derive the amount of premium for goodwill that is payable to the sacrificing partner by the gaining partner. And to derive this amount, you have to follow these steps. So first, you have to find out the gain or sacrifice from the given information among the partners, and then with that you need to substitute it in the firm's goodwill. So firm's goodwill into the gaining ratio, that gives you the amount what you have to compensate as a premium for goodwill, and then you will pass on the journal as given here, right? So now let's quickly get into the problem so that we'll able to work out as many problems as possible, right? Right. So now look here, accounting treatment of goodwill. There are two goodwills as I said, right? So first one in this, let's go from the illustration, then we'll move on to the problems. So as you could see here, they are mentioned like gaining partners capital to sacrificing partner, gaining partners current to sacrificing partners current. So look at the first problem. So it is given that the partners Anu and Bala are sharing the profits and losses in the ratio 3 is to 2. With effect from the 1st of April 2022, they are decided to share the profits and losses equally. So they are given you the old PSR and the new PSR, and it is mentioned goodwill of the firm was valued at. So just I have mentioned here, if it is a self-generated goodwill, you will have the term, okay, goodwill of the firm is valued at. So this is an indicator that you have got the self-generated goodwill valued at, and the amount is given as 50,000. They're asking you to pass the journal entry for compensating the sacrificing partner by the gaining partner. So now you have to follow the instructions what I have given here. For self-generated goodwill, what you need to do, the three step: find out the gain or sacrifice, then you calculate the amount of premium for goodwill, and then pass the journal. Okay, so let us take the question first. Who are the partners in this case? The partners are Anu and Bala. Right? Let me write it here. Okay, so problem number one. Sorry, problem number four, I think so. Right? Let me check it up. Yes, problem number four. Okay. So the partners are Anu and Bala. The old PSR given in the question, so it is 3 is to 2, right? So old PSR given for us is 3 is to 2. That means 3 by 5 and 2 by 5. And it is given that the new PSR will be equal partners, 1 is to 1. That is 1 by 2 and 1 by 2. So you know very well that we are following this easy concept song to derive the sacrifice or gain. So according to that, okay, sacrificing ratio, write the formula is equal to the old ratio, okay, the old ratio minus, okay, the old ratio minus the new ratio. Okay, old ratio minus the new ratio. Okay, now find out first for the partner Anu. Okay, so for Anu, if you're going to substitute in this formula, old ratio was 3 by 5 minus 1 by 2. So when you take the LCM for 5 and 2, you will get the base as 10. So 5, if you multiply with 2 and numerator also with 2, you'll get 6 minus 2 into 5, 1 into 5. So 5, so 6 minus 5 is nothing but 1 by 10. Again, I said in the morning we discussed, if you get any value as positive, then it is denoting that the partner has sacrificed. Okay, now the same way you calculate for the other partner called Bala. Okay, so for Bala, let us discuss what is the amount. Old ratio was 2 by 5 minus 1 by 2. So here also you will be getting LCM as 10. So 5 into 2 and 2 into 2. So that means it is 4 minus 2 into 5 and 1 into 5. So it is going to be 5. So 4 minus 5 is going to be as minus 1 by 10. So this shows that partner B, that is Bala, has gained and the partner Anu has sacrificed. Now look at the question and find out what is a firm's goodwill. It was mentioned as 50,000 rupees, right? So you have to calculate the second step. So far you're done step one. Okay, so these two are step one. Now find out, okay, the compensation of goodwill or premium for goodwill. So have the heading calculation of premium for goodwill. Okay, so in this, the value of the firm's goodwill was 50,000 rupees. This should be multiplied with the share of profit what Anu has got into 1 by 10. So that gives you the amount of rupees 5,000. So this 5,000 will be paid by whom to whom? It will be paid by Bala to Anu. So this 5,000, okay, will be paid by Bala, and to whom it will be paid? Bala will pay to Anu. So the entry will be in such a way, who is gaining here? Bala is gaining. And they are not mentioning anything about the capital method, what method you are following. So you can take it as fluctuating. So Bala's capital account debited to whom? Anu's capital account. Able to understand? Bala's capital account debited to Anu's capital account, and the value will be as 5,000 in the debit and 5,000 in the credit. Now you can just check it up. The entry also will be the same as what we have derived it. Okay, so look here. The amount is 5,000. Okay, Bala's capital account to Anu's. So narration will be goodwill adjusted on change in PSR. Now, to record this entry, dates and the formats are very important. So, on which date this effect is taking place? On 1st April 22. So, the date of transaction is very, very, very important. It is not just calculation and entry framing. This transaction should be recorded on the date of 1st April 2022, right? So please ensure without date and without narration, if you are going to pass an entry and without proper format, then you will not be rewarded the full marks. So keep this in your mind and please don't commit this mistake, right? Okay, now coming up to the second type of problem or the second illustration under this case. Here you can see that. Any doubt up to this? I hope it is very clear to you. Okay, now Girish, Manish, and Harish were partners in a firm sharing profits and losses equally. Because of the increased business and Manish devoting more time, he demanded that his share in the profit be increased, to which Girish and Harish have agreed for it. So you can see there are three partners. Among the three partners, the one partner called Manish is devoting more time in the business and he is demanding for a increased profits. And for this, the other two partners are also agreeing for it. That means all are having a mutual consent. And the new profit sharing ratio was agreed among the partners as 1 is to 2 is to 1. And for this purpose, they are deriving the goodwill of the firm to be valued at 2 years purchase of the average profits of last 5 years. So look here, in the previous problem we had the value of the firm directly, so we were able to derive the amount of premium for goodwill very easily. But here, unlike the previous problem, the case is not that much easy. We have to derive the goodwill by applying the concepts what we have learned in the chapter of goodwill, that is either by using simple average profit method or the weighted average or some method to be applied. So now here it is given that you have to calculate the firm's goodwill at 2 years purchase of average profit. So that means they have made it very clear you have to use the average profit method. That means simple average. Okay, so this is a line that gives us a clear cut information. Okay, it is an average profit. The profit for the last 5 years are given to us. So every year, if you see, first year it's a profit. Okay, second year also it is a profit. Third year profit. Fourth year profit loss, and fifth year you got a profit. So first, what you have to do, you have to first derive the goodwill of the firm. Okay, so first you have to derive the goodwill of the firm. So first let us calculate the goodwill of the firm. Right? This is a problem number 5. So I'm just going to work it out here. Please, okay, listen carefully. Don't be in hurry. Right? So now the fifth problem I'm going to work out here. Who are the partners? The three partners given in the question are, okay, it is the partners are Girish, Manish, Harish. So I'm going to take them over here. Girish, Manish, Harish. Girish, Manish, and Harish. So initially, what is their profit sharing ratio as given a question? They are sharing the profits and losses equally, right? So initially, they are equal partners. Okay, so they are equal partners. So 1 is to 1. Okay, so they are initially equal partners. 1 is to 1 is to 1. So that means 1 by 3, 1 by 3, and 1 by 3. This is their old PSR as given in the question. The new PSR is also given in the question. So what is the new PSR? Just scroll down. You can see that they have decided to share it in the ratio of 1 is to 2 is to 1. So write down that ratio. New PSR is 1 is to 2 is to 1. 1 is to 2 is to 1. So that means now the ratio is 1 plus 2 is 3 plus 1 4. So 1 by 4, 2 by 4, again 1 by 4. Now with the help of this, what you can first derive? Calculate, okay, so calculate gain or sacrifice among partners. Okay, so this is all working notes. Okay, so first write the formula. Every time write the formula. Okay, so sacrificing ratio is equal to what minus what? Old ratio. Okay, old ratio minus new ratio. Okay, old ratio minus new ratio. So first let us calculate for partner Girish. Okay, so for partner Girish, the old ratio. What is the old ratio? The old ratio given in the question is 1 by 3, right? So 1 by 3 minus 1 by 4. So when I take the LCM will be as 12. So 3 into 4 and 1 into 4. So that gives me 4 minus 4 into 3, 1 into 3. That gives me 3. So 4 minus 3 will be as 1 by 12. I'm getting a positive figure. That means he is sacrificing. Now calculate for the another partner. Who's the other partner? Manish. Okay, so for Manish you are going to calculate now. So what is for Manish? It is 1 by 3 minus 2 by 4. So LCM is going to be as 12. So 3 into 4 and 1 into 4. Here 4 into 3 and 2 into 3. So which means 4 minus 3 twos are 6. Right? Happy, right? Yes. So 3 into 4 is 12 and 1 into 4 is 4. So 4 minus 6 by 12. This gives me minus 2 by 12. So since it is a negative, he is gaining it. Then who's the third? Excuse me. Who's the third partner? It is Harish. So for Harish, you calculate it, right? So for Harish, 1 by 3 minus it is going to be as 1 by 4. So that means the LCM is 12. So 3 into 4 and 1 into 4. So that means 4 minus 4 into 3 and 1 into 3. So minus 3. So that means 4 minus 3 is again 1 by 12. So that means even partner Harish has sacrificed. So we found that there are two partners who have sacrificed. So both the partners should get the premium for goodwill. Now calculate the firm's goodwill. So write the heading as calculation. Okay. So calculation of firm's goodwill, right? So calculation of firm's goodwill. So how are you going to calculate the firm's goodwill? You're going to calculate the firm's goodwill on the average basis, right? So first write the average profit. Derive the average profit. Excuse me. So average profit. Okay. So average profit you have to derive it. How you are going to derive it? Add those given details. Okay, that means rupees 4 lakh plus 4 lakh 80. Okay, so let me write along with you. Okay, so rupees 4 lakhs plus rupees 4 lakhs 80,000 plus the third year value. What is given the third year value? Rupees 7 lakh 33,000. Write on the value. Okay, rupees 7 lakh 33,000 plus the amount. What is the amount of the fourth year? The fourth year value is a loss, so 33,000. Okay, so that means instead of adding you can just mention this as minus. Okay, so the amount will be as 4 lakh 33,000. Okay, sorry, 7 lakh 33,000 minus rupees 33,000. And finally the fourth year there is a profit. So what is the amount of profit? Get it from the question. The fourth year profit, if you see, it is 2 lakh 20,000. Okay, so the fourth year is loss, but the fifth year is rupees 2 lakh 20,000. Now add all this value and you have to total this value by 5. That is, sorry, divide the value by 5. So find out and tell me how much you'll get if you total all these values. Okay, please calculate and tell me what amount you'll get when you add rupees 4 lakh plus rupees 4 lakh 80,000 plus an amount of rupees 7 lakh 33,000 plus rupees 2 lakh 20,000. When I do all this, I get an amount of rupees 18 lakh 33,000. From that, if I subtract the amount of loss 33,000, I'll get an amount of rupees 18 lakhs. So my total profit, okay, rupees 18 lakhs. This when I divide it by 5, how much will I get it? That you have to calculate. So 18 lakhs by 5. Calculate and tell me the value quickly. So 18 lakhs by 5. So 5 table, right? So 5 threes are 15, 16 7 18 3. So that means 3 lakhs 50,000 rupees, right? you will be getting an amount of rupees 3 lakhs 50,000. Now, what is this? This is only average profit. Now, goodwill, how to derive it? So, goodwill formula you have to write it. So, goodwill is equal to the average profit, okay, into number of years purchase in this case, okay, number of years purchase. So that means average profit is rupees 3 lakh 50,000 into, check out how many years purchase is given in the question. It was mentioned 2 years purchase, right? So that means into 2. I'm sorry, it is 3 lakh 60. Okay, I made a mistake. It is 3 lakh 60. Sorry, excuse it. Okay, so 3 lakh 50. I made a mistake. Okay, it is 3 lakh 60. Just a minute. Okay, this is 3 lakh 60. Okay, so 3 lakh 60 into 2. So how much it will give? 0, 0, 0, 0, 7 lakh 20. So now the goodwill of the firm, we also got rupees 7 lakh 20, and there also we have got rupees 7 lakh 20. Now what you should do? In this 7 lakh 20, okay, calculate the amount of premium for goodwill of those two sacrificed partners. So who are they? They are Harish and Girish. Okay, 1 by 12, 1 by 12. So that means Harish, okay, there's Harish and who's other partner? Girish. Right? So Harish and Girish. So calculate in such a way on that 7 lakh 20,000 into how much you got the value 1 by 12, right? So right here into 1 by 12. So in 12 table, if you do it, how much you get it? 12 6, right? Followed with the four zeros, right? So that means each partner will be getting rupees 60,000 each as his premium for goodwill. So this amount for these two partner will have to be paid by whom? Manish. So that means Manish will have to pay altogether rupees 1 lakh 20,000. Okay. So Manish will be paying an amount of rupees 1 lakh 20,000. And some nothing they mentioned about the capital. So we take the capital as fixed capital or fluctuating capital. Fluctuating capital. Okay, so entry should be passed. So the entry I'm going to pass is Manish capital will be debited. Exactly, good. Okay, so Manish capital account will be debited, followed by that to Harish capital account, and followed by that, okay, to Girish capital account. Any doubts in the concept so far? Okay, to Harish, to Girish capital account. So now you fixed a value. So Manish will pay altogether rupees 1 lakh 20,000, and each partner will be getting an amount of rupees 6,000. So this is how you will have to transfer in this particular problem. Any doubt in this concept? So we have learned if goodwill is not given, how to derive the goodwill, then how to distribute it. If goodwill is given, how to derive and distribute it. So hope these two concepts are clear. So this is what they say: existing goodwill you need to write off. So to write off, we have already discussed it in case of fixed capital and in case of fluctuating capital. Now straight away, let's move on to the practical problem. Right? There are only 3 or 4 problems we'll have it up. So we'll quickly complete the practical problem also with respect to goodwill treatment. Okay, or I'll just guide you. You are going to work the problem and you're going to share it to me in my WhatsApp. I've given my WhatsApp number and also I've given my email ID. So please feel free to share your doubts or post your doubts, and please like the video if you really like it, and please share the video with all your fellow members so that it will be helpful for us. And please give your feedback and comment so we can improvise ourselves in the technical side and also in the conceptual way, right? So now coming to the practical problem exercise 1, come back to your Goodwill. So here you have got almost like four problems, I hope so. Okay, so what is given, let us see here. So first case, it is given as Asha, Nisha and Disha are partners who are sharing the profits and losses in the ratio 3 to 1, and respectively with effect from the 1st April they agree to share equally. The goodwill of the firm was valued at, so same pattern we have already worked out. So what you need to do, find out who has gained, who has sacrificed among the three partners, and the gaining partner should be debited, sacrificing partner will be credited, and you have to find out the premium for goodwill on the amount of rupees 18,000, and that will help us to get the split up amount towards the sacrificing partner and gaining partner. And here again, the same pattern problem what we saw right now. XYZ are partners sharing profits and losses in the ratio 5 is to 3 is to 2. And with effect from 1st April 2022, they have decided to share the profits and losses equally. Partnership deed has provided that in the event of any change in the profit sharing ratio, goodwill will be valued at 2 years purchase of the average of the preceding 5 years. So you have got 5 years. In the previous case also you had loss, here also there is a loss towards the end. So loss amount to be subtracted, okay, and get the average profit. That average profit should be multiplied with the number of years purchase. Write the formulas wherever they have asked for it or wherever it is applicable, and then you need to calculate the firm's goodwill first. On the firm's goodwill you will be deriving the premium for goodwill for those partners who have sacrificed, and you will be debiting the partner who has gained. Okay, so there is nothing special in this problem too, right? Let's come to the problem number 7. Okay, so what is given in problem number 7? In the problem number 7 it was mentioned that there are partners named as Mandeep, okay, Vinod and Abbas, who are partners sharing profits and losses in the ratio of 3 is to 2 is to 1. So we have got three partners, Mandeep, Vinod and Abbas. They are sharing profits and losses in the ratio of 3 is to 2 is to 1. From 1st April 2022, they have decided to share the profits equally. The partnership deed provides that in the event of any change in the profit sharing ratio, goodwill shall be valued at 3 years purchase of the average normal business profit. So how the words they're using, you see. Okay, goodwill has been valued at 3 years purchase of average normal profit of last 5 years. Okay, so last 5 years normal profit. So normal business profit and losses for the past 5 years are given to us starting from 31st of March 18, 19 value, 20 value, 21 value, and 22 value, right? So 18, 19, 20 values here, 21 and 22 value are given. Now what we need to do? Okay, let me just work out this problem for you. First calculate the sacrifice or gain, right? So who are the partners in this case? Okay, who are the partners in this case? It is Mandeep, sum number 7, right? So write the partner's name. Mandeep, Vinod, and Abbas. What is the profit sharing ratio? It is 3 is to 2 is to 1. So 3 plus 2 is 5 plus 1, 6. So 3 by 6, 2 by 6, and 1 by 6. This is nothing but the old PSR of the partners. The new PSR is given to us in the question. Check it up. Yes, it is given equally. So 1 is to 1 is to 1. That means 1 by 3, 1 by 3, and 1 by 3. So first you find out who is gaining and who is sacrificing. So write a heading calculation of sacrifice or gain. Okay. So calculation of sacrifice Okay, calculation of sacrifice or gain of partners, right? So this is a first calculation. Now, according to this, first let me calculate for Mandeep. So what is the formula? It is going to be as your old ratio minus new ratio. Okay, so this is the formula to be followed. So old ratio of Mandip is 3 by 6 minus new ratio is 1 by 3. So having, if you take LCM for 3 by 6 minus 1 by 3, what is your LCM? It is going to be as 6, right? So 6 into 1, 3 into 1, 3, minus 3 into 2, 1 into 2, 2. So this will give you 1 by 6 positive figure. So it is a sacrifice. Mandip has sacrifice. Now calculate for Vinod. So for Vinod, it is going to be as the same old ratio minus new ratio. So old ratio was 2 by 6 minus 1 by 3. So this will give you again the LCM as 6. So 6 into 1, 2 into 1. So 2 minus 3 into 2, 1 into 2, 2. So in this case, 0. There is neither sacrifice nor gain. So leave out Vinod. Go for the third partner. It is Abbas, right? So calculate what is for Abbas. So for Abbas, it is old ratio was 1 by 6 minus 1 by 3. Okay, so 1 by 6 minus 1 by 3. So LCM is 6. So 6 into 1 and 1 into 1. So 1 minus 3 into 2 and 1 into 2, 2. So this gives me minus 1 by 6. So that means he has gained. Now I have found out the sacrifice or gain among the partner. Okay, now I need to find out the goodwill of the firm, right? That is through average profit method. Okay, so goodwill of the firm. Okay, so how I'm going to calculate on average basis. So average profit I should derive now. Okay, so average profit is equal to add all the year's profit, that is 1 lakh rupees plus 1 lakh 50,000. Okay, just keep adding those given information. Okay, so let me just take the values. What are the values? It is 1 lakh rupees and then 1 lakh 50, then again 50,000, 2 lakh, and finally 2 lakh. Okay, so here you got all the profits only, right? In this case there is no loss for us. Okay, so average profit, I'm going to add the amount. So 1 lakh rupees plus rupees 1 lakh 50,000 plus amount of loss rupees 50,000. Okay, so that means it should not be added. Okay, there is a loss, right? So it should be subtracted minus 50,000 and followed by that plus 2 lakhs, and finally again you have got a profit. So the last year profit value that comes to rupees 2 lakhs once again. Okay, so this should be divided by 5. So when I add and subtract all this, I am getting a value of rupees 6 lakhs to be divided by 5. So rupees 6 lakhs, if I divide it by 5, how much will I get it? Rupees 1 lakh 20,000. So what is this 1 lakh 20? My average profit. So now read the question, how to derive the goodwill, what they are given as a restriction. Okay, in the question I said goodwill of the firm be valued at 3 years purchase of average normal profit. So into 3, right? So average profit I derived it. Okay, this should be multiplied with 3. So goodwill, write the formula. Okay, goodwill is equal to your average profit into number of years purchase. Okay, number of years purchase. So accordingly, you substitute the value rupees 1 lakh 20,000 into 3. So how much you will be getting it? Rupees 3 lakh 60,000. Your value of firm's goodwill will be rupees 3 lakh 60,000. I'm making clear to you. Now you have to find out how much will be for those sacrifice and gain the partner, right? So in this value of 3 lakh 60, okay, how much you have got the gain or sacrifice? 1 by 6 and 1 by 6. So now in this 3 lakh 60,000, you find out what is 160 ratio. So that means 6 6 are 36. So that means 60,000 will be the amount of premium for Goodwill. So 60,000 is nothing but, okay, this is your premium for Goodwill. Now I have to frame the journal. So who has gained? As I said, Abbas has gained, Mandeep has sacrificed. So entry will be as Abbas capital. Okay, Abbas capital account is debited to Mandeep's capital account. Okay, to Mandeep's capital account. Okay, so amount will be as rupees 60,000, 60,000 each. Okay, and here in this question you have to pass with the date, because the question says very clearly the effect is from when. Okay, the effect of this changes will happen from when? 1st April 22. So that means here you need to pass with the date. So 1st April 22. So 1 4 22, on this date the entry should be passed. Clear? Okay. Now let's move on to the problem number 8. Okay. So what is the eighth problem? Let's read it properly, because many problems we are doing it, but some problem will be easy, some problem will be tricky, or some problem will be difficult. So let's read the question. What is it? A and B are partners in a firm sharing the profits in the ratio 2 is to 1, right? They have decided that with effect from 1st April 2021, they would share the profits in the ratio of 3 is to 2. But this decision was taken after the profit for the year ended 31st of March 22, the value of rupees 90,000, which was distributed to the old partners, which was distributed in the old profit sharing ratio. The firm's goodwill was valued on the base of aggregate. Look here, there is a difference between average and aggregate. Average means you need to total and then you have to divide by 5. Aggregate means only totaling up, no average. So this problem is really a twister, icebreaker, I'll say. If you fail to read the question properly, of course, this is going to change the gameplay. So here it is an aggregate, it is not the average. Okay, right. Aggregate of 2 years profit preceding the date decision became effective. Profit for the year ended 31st of March 2020 and 21 are rupees 60,000 and rupees 70,000 respectively. Capital accounts of the partners as at 31st of March 22 stood at rupees 1 lakh 50 and rupees 90 for B. So this problem is really going to be a problem, right? Now we have to calculate goodwill. The firm's goodwill is not given to us straight away, right? But what is given in the question? The firm's profits are given, and what they said, firm's goodwill was valued on the basis of the aggregate. Again, I am saying it is to be valued on the aggregate of 2 years profit preceding the date of decision became effective. Okay, so we are given what are the dates? The dates given for us in the question are for 2020, 2021. These are 2 years given to us. So when the decision was taken effective from 1st April 21. So that means these two are the years profit, 60 and 75. So when you add these 2 years profit, how much you get? That is what we have to find out first. So goodwill, right? So first find out goodwill. Okay, so it is problem number 8 which we are going to work it out. So I'm just going to write out in the sideline, okay, over here. So what I'm going to calculate? Goodwill. Okay. So goodwill of the firm. So for calculating goodwill of the firm, I'm just going to calculate the profits, add the profits. Okay, it is given aggregate. Okay, aggregate profits and not average profit. So this is something which you would have not come across. So aggregate profit is nothing but it is total only. Please keep this in mind. Okay, aggregate profit means it is total only. Okay, so the 2 years profit given for me are rupees 60,000 and rupees 75,000. Okay, so add these 2 years profit 60,000 and rupees 75,000. Please do not make the average for it, just only total them. So if you total the value of these two, you will be getting an amount of rupees 1,35,000. So this 1,35,000 is nothing but this is your goodwill amount, right? This is your goodwill amount for the firm. Right. Now you find out what is the okay. Now you find out what is the amount of what is the value of the old PSR and what is the value of what is the value of your new PSR, right? So in the question, if you see the old PSR is given as 2:1 and the new PSR is given as 3:2. So with this help to calculate the gain or sacrifice. So it is between A and B, right? So there are two partner A and B. So the old PSR as per the question which is given to us is how much? Old PSR is 2:1, right? So 2:1 is the old PSR, is 2 by 3 and 1 by 3. The same way, the new PSR which is given to us in the question is 3:2. So even record that below this. So 3:2. That means 3 by 5 and 2 by 5. Now find out who is going to be the sacrificer and who is going to be the gainer. So write the formula. Okay, so sacrifice is equal to your old ratio. Okay, your old ratio minus the new ratio. Without formula, please don't proceed any sum. Okay, so first for A, I'm going to derive it. So for A, the old ratio was 2 by 3 minus 3 by 5. So when I take LCM for this, I'll be getting 15. So 3 into 5 and 2 into 5, that means 10 minus 5 into 3, 3 into 3, 9. So 10 minus 9, this gives me 1 by 15. Positive figure, that means sacrifice. Clear? Now coming to the partner B. So for partner B, the old ratio was 1 by 3 minus new ratio was 2 by 5. So this will again give me the LCM as 15, 3 into 5 and 1 into 5. So 5 minus 5 into 3 and 2 into 3, that gives me 6. So this gives me minus 1 by 15. So that means partner B has gain. Now you know the firm's goodwill, calculate how much they have to compensate as premium for goodwill. So that means in the amount of rupees 1,35,000, calculate what is 1 by 15 the share. Okay, this will give you the amount of premium for goodwill. Am I right? Yes. So how much should be the amount of premium for goodwill? The amount of premium for goodwill when you calculate 1,35,000 by 15 will be 9,000 rupees, right? So 15 nines are okay 135. Am I right? 15 nines are, check it up. 5 nines are 45, 4 9 ones are 9 plus 4 13. So 135. So that means 9 times and followed by the 3 zeros. So this gives me rupees 9,000 as the premium for goodwill. Okay, this is the premium for goodwill. Okay, now we need to pass the journal entry. Just check out the question. Have they mentioned anything apart from goodwill entry? Okay, read the question once again so that it makes us clear. Okay, profit for the year ended is given to us. Okay, and it was given accounts of the partners as per the capital account of the partners. Okay, as per the date 31st of March to that rupees 1 lakh 50 and rupees 90,000 for B. Right, so that means we have to bring even that capital amount into the picture. So A's capital account will be debited to B's capital account will be created rupees 6,000, and the next entry will be B's capital account is debited to A's capital account, and that will be for 9,000 rupees. Am I making sense to you? So in this problem, what are the things that it asks us to do? Pass the journal entries and prepare partner's capital account. So look here, as we found even here, the value of goodwill is 1,35,000, and we have found the sacrifice value correctly. Gaining value is also correct for us. Now adjustment of the profit, okay, because what has happened? You have distribute the profits, okay, wrongly, right? It was mentioned here like a and B are partners in a firm who are sharing the profits and losses in this ratio. They have decided that with the effect from 1st April 21, they would share the profits in this ratio. But this decision was taken after the profit for the year has got distributed. So 90,000 rupees is the profit that you got distributed, right? Now that has to be reversed back. So for reversing that only, you are going to find out in this week. Now I'll tell you what it is. Okay. So what is the old ratio? Okay, old ratio was 2 by 3 and 1 by 3. Right? So 90,000 is the profit. Okay. 9,000 is the profit. This should have to be distributed in what ratio? 3 by 5 and 2 by 5. If that be the case, then what will be the amount? That you check it out. Okay. So that means it will be as 9 5 ones are 5. So H, okay, followed by the three zeros. So 18,000 into 3, how much you'll be getting? 0, 0, 0, 8 threes are 24, 2, right? So 304, 54,000 for him. And the same way for another partner, it is going to be as 2 by 5, right? So 90,000 into 2 by 5. So that means it gives you again 18,000. So 18,000 into 2, that gives you 36,000. This is the actual amount to be credited. But what happened? You are distributing the old ratio itself. That is 2 is to 1. That you check out how much it is. So 90,000 into 2 by 3, and over here for him 90,000 into 1 by 3. So 3 table, if you see 30,000, here also it is going to be as 30,000. Now you find out what is the value. 30,000 into 2 will be as 60, and here if you see 30,000 into 1 will be as 30. So actually if you see, you have to pay, this is for A, this calculation is for A, and this calculation is for B. Actually A has to receive the amount of rupees 60, but how much he received? Rupees 54. That means he has to get an amount of rupees 6,000 extra. Am I right? Okay. Similarly, B has to get an amount of rupees 36,000, but okay, he has been given 30,000. Okay. So why you are debiting A's capital and why you are creating B's capital? I'm explaining to you once again. What was the new PSR? 3 is to 2. So this amount of 90,000 should have got distributed. Okay, this amount of rupees, the amount of rupees 9,000 should got distributed in what ratio? I'm sorry, I made one mistake. Kindly excuse it. Okay, the amount of 90,000 has to be distributed in what ratio? In the new profit sharing ratio. So according to new profit sharing ratio, this is as per the NPSR. Okay, this is as per NPSR. This calculation is as per your old PSR. Okay, so according to this NPSR, you should get only 54. But how much you gave? 60. That means you are given extra 6,000. That's what you're going to pull it back. So that means A's capital will be debited. Okay, so you will follow one entry called A's capital account will be debited to B's capital account. This is for the treatment of correct distribution of profit. So that's how you're going to distribute. Okay, 6,000, taking it from A and you'll give it to B. This is one entry to be followed, and the second entry to be followed is for the goodwill, that is 9,000. So who is gaining in this case? Partner B is gaining, so it will be as B's capital account. This is very important problem, my dear students. B's capital account will be debited, followed by that to A's capital account. Okay, to A's capital account. Here the amount is for 9,000. Okay, so we are done with the journal entry also. But the sum is not stopped just with this. The sum is also asking us to prepare the capital account of the partners. So right here, okay, capital account. We are now going to prepare the ledger account. Okay, so here debit, and over here I'm going to make this credit. So particulars and amount of A and B, particulars, amount of A and B along with the rupees symbol is very, very, very important. Okay, now as you know, capital account, the old balance will always be favorable most of the case. So by balance brought down. Okay, so bring the old balance to the partner. So 1 lakh 50 and 90 as given in the question. 1 lakh 50 for him, and for him it is 90. Now you are debiting the amount of wrong profit from A and you are crediting to B. So that means it will be as by A's capital account. Okay, by A's capital account. Nothing in the value of A, but it should be for B. Similarly, the amount B is paying the premium for A, so it should be as by B's capital account, and the amount in A's capital 9,000 and nothing over here. Now similarly here it is as to B's capital account. Okay, to B's capital account, the amount should be in A's column. The value is 6,000 and nothing over here. And then to A's capital account, right? To A's capital account, amount will be in the B column, that is 9,000 rupees. And then you're going to find out a new balance. So if you add these two, saying 1 lakh 50 plus 9,000 is going to be as 1 lakh 59,000, right? It is going to be as 1 lakh 59,000. And here 90,000 plus 6,000 is going to be as 96,000. Over here, we have only 6,000 rupees out of 1 lakh 59,000. So shortage will be recorded as 2 balance C bar D, and the value will be as 1 lakh 53,000 for him. Similarly, here you have got 96,000, but only 9,000 is available. So the balance will be as 87,000. Now both the sides you will be getting 1 lakh 59,000 and 96,000. So without doing this capital account, if you close your journal alone, then the entire sum will go wrong. So hope we have discussed all the problems, and this problem is the very crucial problem and hectic. So this is running like you have to calculate the gain or sacrifice, then you have to calculate the amount what you have to reverse it, then you have to frame the journal, then you have to prepare the ledger. So it can be asked max to max in 4 mark question. And I hope today in this video session we have discussed completely about the goodwill and the treatment of goodwill, purchase goodwill, and self-generated goodwill, everything. If you have any doubt, please report it in the comment section. And students, please don't hesitate to ask your doubts or to share this video with all your friends. Any doubt, anytime, please ping me. Please share your feedback, and please like the video and subscribe it. Many of you are viewing it without subscribing. Please subscribe it and give your like, which will motivate us to give more and more easy way to understand the problems. Thank you, students. We'll meet in the next video. Thank you.